Alright, ladies and gentlemen, are you ready for a midday market update? We're going to talk about the S&P 500, what is exactly happening today with the initial jobless claims. You are down almost 1% here again today, somewhat because of that. Although we have rallied a lot and we're just giving back a little bit, we do have important earnings in the after hours that will move the markets and will continue potentially on this bearish downtrend, guys. But AMC, on the other hand, looks incredibly bullish, not only on the technical basis, but with the data that we are getting reported from Ortex, guys. So let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Now, enough of that. Let's get into this information, and we're going to look at the technicals, but we're going to talk about the initial jobless claims and the Ortex data, Stonko tracker data, all of that good stuff before we do. So if you want to look at the technicals, that's going to be later on into this video. If you don't want to know about anything else, just skip to the end and you will get the technical breakdown. But what we were faced with today was the weekly jobless claims, and they unexpectedly fall. And the key point says initial claims for state unemployment benefits dropped 15,000 to a seasonally adjusted 190,000 for the week ended January 14th, the Labor Department said on Thursday. Economists polled by Reuters had forecasted 214,000 claims for the last week. Claims have remained at levels consistent with a tight labor market, even as layoffs have accelerated in the technology industry and interest rate sensitive sectors like finance and housing. So you're continuing to see a tight labor market, which is okay if inflation continues to come down. The fear is that if the labor market remains tight, then people won't have to drop prices and inflation could start to accelerate at some point in the future. And that's the worry. That is a reason why the S&P 500 is down almost 1% today. Another big reason, I will say, is just the fact that we got rejected at the same level that we have been getting rejected at over the last year now. Over a year now, since January, the beginning of January, like January 3rd, you got you hit that top, and then you've got rejected at this line every single time. And this time was no different. And actually yesterday you got rejected at this level, which was right at $400. And you also fell under the 200-day moving average. You found a little support at the 50-day moving average. And then today you fell under the 50-day moving average. So it looks like on a technical basis, the support is just getting beaten down in the markets. Like there's no strength in this market right now. You've seen a lot of strength to the start of 2023. You've seen a pretty impressive rally of like 6 to 7%, but you have given more than half of that back at the time of recording this video. Now, why is this all so important? Well, it does feed into AMC. It feeds into your stocks that you own in your portfolio. There's only so much that you can do, or your stock can do, when the markets are just absolutely cratering. And you are seeing things like the VIX actually starting to go up here today, and we'll look at that when we get into the technical analysis. But risk was really priced way too low. You've seen the VIX at historically low levels for the federal funds rate being at 5%, for record levels of cash, right? People are not buying insurance on their portfolios, which was a telltale sign that this was going to happen, right? Eventually, we were going to see another downturn. The question is, does this turn into a new 52-week low? Does this turn into a mass liquidation? That is the big question. And with earnings and after hours, you're going to get that first glimpse of what is going to be happening with tech earnings. And that is because you get Netflix earnings. And Netflix has rallied a lot, guys. So it wouldn't surprise me for Netflix to give up a decent amount of this rally off of earnings. And even if companies aren't related to Netflix, right? You got Tesla next week, you got Microsoft next week. Netflix will move those stocks as well, just for the simple fact that they are in the technology space along with Netflix. So Netflix is going to be massively important for the markets. That does come out in after hours, and just like I just said, if you look at Netflix, it's rallied a lot, so it doesn't look promising for an upside move unless we just totally get surprised by what they have to say. After all, the stock hit a low of $162.71, and you're trading at $321 at the time of recording this video. That is a rally of about 100% from the lows. So to give 20% of that back would not surprise me, and that would cause a pretty big move down in the S&P 500. Nonetheless, let's get into the information around AMC that we have so far on the day. It is very early in the trading day. By the time you guys see this video, you're going to be about halfway through the trading day. It's going to come out at noon. I'm filming this video at about 11:20 a.m. in the morning Eastern Standard Time. Now, if you take a look at the live short interest of free float, that is sitting at record levels that we have seen ever since AMC, the whole saga, started in 2021. You have not been at these levels since June of 2021, the last time the stock really went through a 10x like event. Now, with that being said, the live short interest of free float is sitting at 21.95%. The amount of shares currently sold short sits at 113 million. Cost to borrow rates are insanely high, guys. Interactive Brokers has the cost to borrow rate at 117.36%. This just continues day after day to go higher. You have about 300,000 shares that are currently available for trading, and the cost to borrow max across the board is 327.96%, cost to borrow average of 302.8%, and cost to borrow minimum at 217.16%. So these numbers, whenever you get this high, you have always seen a rally in AMC stock. Now, at some points throughout the last year and a half, you have seen the option activity play a bigger role in a lot of those rallies, right? And what I mean by that is the interesting flow sentiment has typically not been this bearish. So this is really the oddball here, because like we're seeing today, 102 orders totaling $22.76 million, positive order value of 6%. Usually you're not in that 6% range. Usually if the cost to borrow rates are this high, the technicals look so good, the stock has rallied essentially over 100% from the bottom, I mean, you're usually over 50% positive order value, but that has not been the case as of recently. 378 orders totaling $89.47 million, positive order value of 3% over the last week. Now, I don't think that is as important as what we are seeing with the Stock O tracker data, and I think these numbers could actually set us up for a very big Friday, potentially even throughout the rest of the day. Today, I'm not going to throw my hat out there and say, you know, we're going to see a huge close to the day, but I do think it's possible even in after hours you could see a big move if Netflix does surprise with an upside move. But nonetheless, what we're seeing with the numbers here on Stock O Tracker is 26,000 calls that are currently in the money, 500,000 calls that are out of the money. You have not seen a 5,000 contract option expiration in a very long time, but that is what you are seeing for this week. And the times in the past where you have actually seen 300, 400,000 options for an option expiration, you have seen those Thursdays and Fridays can be pretty explosive, especially on Friday, because if the price of the stock moves up, I mean, you instantly have to hedge out those options if you are a market maker, a hedge fund, or a money manager that, you know, did sell puts or sell calls. So there are the numbers on the call side: 161,000 puts that are currently in the money, 165,000 puts that are out of the money. So some very big numbers here that you are seeing as far as the Stock O tracker data, and that does make me very bullish on potentially a big move tomorrow. And I think it's worth it, just on a risk to reward basis, to make a small trade on a, you know, potential big move tomorrow. We've seen 20% moves multiple times when you do have these big option expirations, and you don't have big option expirations all too often. You know, it's not like every week you're getting huge option expirations, but when you get them, those Fridays can be very explosive. So hopefully that makes some sense to you guys. Now let's go ahead and look at the technicals before we do wrap up this video. We'll be back at 4 o'clock with an updated video of all of this information. We're also probably going to wait until after 4, not exactly sure, because I do want to hear Netflix earnings and what that does to the markets, but Netflix earnings do come out at like 4:15 or sometimes even 4:30, 4:20 sometimes, so they're a little bit later after the markets do close. But nonetheless, like I said, on the S&P 500, cleanly rejected at that $400 level, which was this descending level of resistance that we have been finding resistance at and really getting rejected every time at throughout the last year. Little bit over a year as of right now. You broke under the 200-day moving average. You broke under the 50-day moving average. The next level is the 100-day moving average, and that is at 384.03. So $384.03. That is going to be the next level. If you break under that, you're really in no man's land. I'll tell you guys right now, though, the last time that we did get rejected at this level right here, this line, you hit 408.61, and then within 1, 2, 3, 4 trading days, you basically just collapsed, right? You went from 408.61 down to 378 within 4 trading days. So that was a very big move, and you're kind of on the same path to do that again. You went from 400 to 387 in 2 days. If earnings are bad with Netflix, guys, you could fall quite a bit, and it could get very aggressive. And a lot of it does depend on just how bad earnings are. Granted, you know, there's very high earnings expectations still for 2023, but we do have a week to 2 weeks before we get a lot of the large tech companies. That is what will be the dagger in the coffin potentially for the markets. Now, with AMC stock, you have seen a lot of bullishness over the past couple of weeks. Obviously, the stock has moved up like 100% from the 52-week low, in which we called that out perfectly, but you have since gotten rejected as well with the markets. Now you are at this critical level, which is really a resistance level in the past, was a support level, right? A couple times, obviously back here in November, you can see the importance of this blue line right here. So as long as we stay above this, that is very bullish in my personal opinion. You did just get a bearish indicator. A price crosses the moving average, which is not good. The RSI at 53.25, and the MACD is in bullish territory. So from my perspective right now, all of the information on AMC looks good. The technicals look good, but unfortunately we are kind of handicapped by what the markets want to do, and the markets don't look that good. Obviously things can change on a drop of a dime, and that's why Netflix earnings will be so important, guys. So if you want to stay up to date with all of this key information, hit that like button, number 1. Number 2, subscribe to the channel. Number 3, turn that notification bell on so you will be notified every time a video is uploaded. Most importantly, guys, enjoy the rest of your day, and I will see you in the next one.